Good morning, everybody. I'd like to welcome you to the Upper Tampa Bay Chamber of Commerce Economic Development meeting. And today's topic is the ERC, Employee Retention Credit Program, kind of an update on it and let you know what's going on. And maybe Vince can tell us the time frame. I believe it's open till 2025, if I'm not mistaken. Is that right?
I'll let Barrett comment on the timing here. I'll make some introduction. We're going to get into that. Yeah, we'll give you the detail.
But we've been doing it for what, 2 years, Vince? I think.
Yeah.
Roughly. So
a year and a half.
And you probably have an update on the dollar amount, and I can get information to whoever is on the call that needs it. And as I said, we'll record this call and share it. But with that, I'm going to just turn it over to Oldsmar resident Vince Albanese.
All right, thank you very much. And apologize for not being there. I'm down at the Don Cesar for a conference down here. So let me get my screen back. Okay, assuming everybody can see that. All right, so just a brief update. There's for those that don't know, there is another 501c3 operating in parallel, and this is truly a partnership between the Upper Tampa Bay Chamber and the Oldsmar Neighborhood Association, of which I'm a founder and participant in. So our mission here is been to empower local small business, of course, which is the job and primary responsibility for the chamber. And so Doug and I, through connections we had, started to look at the employee retention credit as a way to accomplish a few things here. One is to get business back post-pandemic to local small business, which I also consider to be the heart and soul of our community. The second part of it, though, is that we've worked out a way to take that and turn the results of that into donations for charitable efforts. So that's the story I'm going to tell you today. So 2 seconds on the Oldsmar Neighborhood Association. We are a 501c3. We're supported in part by the city of Oldsmar and others within the neighborhood. You'll be seeing us as we take and use the donations made back from programs like this as we invest back into our community. At the very highest level, our mission is we're trying to get people to work together and cooperate and show that cooperation makes it better for everybody. And the ERC program is a prime example of that. So we worked together, chamber members got together. We've had, I believe, certainly results that I am truly proud of, but we're sharing all of that with everybody here. So that's the spirit for the service organization called the Oldsmar Neighborhood Association. Here's an example of results to date. There are names that you'll recognize that have been the recipients of this. But if you look on the right side, this is not trivial. Through the efforts, through Doug's efforts at getting the word out, through the chamber's efforts in supporting this, through our efforts, and through a chamber member called Emerge 180, which I'll introduce you to in momentarily, we have returned $3.7 million in in cash, fundamentally, back to small businesses in the area related to their suffering through the pandemic. The average return has been $151,704. So this is significant money, and it has, because I know quite a few of these stories here, it's been instrumental in helping preserve these small businesses, and fundamentally, as an example of a government program that actually has worked. Not only has it ensured their survival, but has it ensured their growth going forward. So again, not trivial, absolutely worth taking your time to look at. And if there's anyone in our community that hasn't taken advantage of this, then I want to, the point of this slide is there could be a lot more names on this. And I'm going to address some of the issues here as to why not everyone.
Hey,
right?
Vince, can you go back to that slide real quick? And I just want to point out an example for everybody. I'm on the board of directors of the Jolly Trolley, and so I brought this to them probably a year ago. And initially they said, they talked to their accounting firm, and they said they weren't entitled to anything through this ERC. And lo and behold, I finally convinced them to at least reach out to Vince and Emerge 180. And correct me if I'm wrong, Vince, which I know you will, but I think the number that they went from not getting anything back to getting, I believe the number is $600,000. Is that correct?
Yeah, it was over $600,000. Yeah.
It came back to them. So, and there's similar stories. I can tell you there's a realtor that's on there that didn't think they were going to get anything because they had an increase in actual revenue that year. But they actually got back about $11,000. And the reason is because Emerge 180 was skilled enough to know how to navigate the ERC, and basically found that, you know, because of the pandemic, had they been, that their revenue potentially would have been higher. And correct me if I'm wrong in speaking out of term, but that they could have been higher had they not been restricted by holding open houses and COVID requirements for showing property, and that their revenue could have been higher. So don't just think that you're not eligible for it because maybe you had an increase in revenue or something to that effect. So did I speak out of term at all?
No, and matter of fact, that's a great segue as to this next slide here. So why isn't everyone on the list? We were all impacted in some way. If you owned a business, you were impacted by COVID. And a lot of it has to do with with fear, right? Am I going to be audited? Why hasn't my CPA recommended this to me? What am I going to have to pay the money back, right? How can I use the capital? This sounds overly complex. Who wants to work with the government? Sounds like it's going to be a big deal. And Doug, in line with your comment there, with us today is Barrett Rodriguez from Emerge 180. So Barrett is a tax attorney, prominent tax attorney, works for Emerge 180. And Barrett's expertise and the expertise of the team over there has really been the critical factor. So they have processed thousands of these all across the country, not just for our little subset here. And what I've discovered is what you're pointing out, Doug, which is there are nuances there. None of us want trouble with the IRS, right? Emerge 180 though, and Barrett's team, and Barrett in particular, is an expert on this. And so I've invited him to speak today. You actually will have the expert here. We're going to let Barrett talk about a few of these topics as an introduction, and then there'll be some question and answer where you actually get to talk to a tax attorney who is quite an expert at doing this. I would like to say the call to action here is that Barrett will tell us how long this program runs. It still has runway. And as a matter of fact, Emerge 180, I believe, is busier than ever. There is a website. So if you've got the flyer that Doug's been handing out, that URL link at the top is really all that's required. You put your name and your address in. You have to have had employees on a payroll, a W-2. It's really the fundamental requirement. All we're looking for is a name and an address and a phone number. You can put that in at that website. My email address is here. And of course, everyone knows Doug is internationally famous. You can get to Doug at any point in time. But all three of those lead to one thing, which is we are entering your name on that website at the top. And then after that, Emerge 180 takes over, and it's a seamless process, and it seems to move. So without further ado, I'm going to introduce you to Barrett, and Barrett, you can walk us through maybe just a quick, here's what I'd like to hear. A couple of minute recap as to what this program is, right? And your particular expertise around the nuances as to why you guys have been so successful over there in doing this. And then we'll open it up to some questions.
Absolutely, Vince. Thank you for the kind words of introduction. I was planning on going through a brief history of the program, how it's come about, some of the different changes that have happened since it was originally passed, and then working through how the credit works. And last but not least, just going through a couple, highlight points that people should take into account. I will absolutely work into the expertise area as well, at your request. So starting out with the history, this program was passed back in March of 2020, along with the PPP and a lot of other programs that are more well known. At the time that it was passed, you could not get both. So the PPP was being pushed by large banks. It was out there in front of everybody. This program went a little bit unnoticed because of that. In flash forward to December of 2020, and there was a major change where you were allowed to go back retroactively all the way back to March, and it was no longer a ban that you got the PPP. So there's some calculations to do related to that, but it's not an outright ban anymore. So suddenly a lot of businesses that had chosen the PPP due to ease and speed, all of us, have the ability to come back and get this additional funding. The IRS has published, they actually did a final update in 2021, which removed the credit for most businesses in Q4 2024, unless you're what's called a recovery startup, which I'll get to in a minute. So for most businesses, Q3 2021 is the end of the wage period, which you can claim this. However, you can claim this credit on into 2025. So there's a time, there is a time frame, but it's not like the PPP was, where you had to hurry and get it done before the money ran out. There is no running out of money for this program. So no reason to wait. It's available now, but there is a little bit of time still. The guidance that has come out on this is it's a bit conflicting. The IRS has changed their mind a few times throughout this process. Most of what we have is a revenue procedure that comes in a Q&A question. So to maybe just briefly touch on Vince's question about expertise, the Q&A session part of that is where all of the nuance comes. We have to, there's a bunch of questions listed about businesses, and someone has to tie your business in your particular situation into those examples and see, is it more like this one or more like that one? So that requires a bit more nuance than some people will devote to it. Now, we're going to talk about how you qualify in a minute, so I'll go into a bit more detail on that then. But just to keep that in mind, you probably never heard of this program in 2020, even though it was available, or you're probably not much in 2021. It's become a very popular program right now, largely because it is the only remaining program available for COVID relief. And so I know that you might not have heard about it in 2020 or 2021, but I know that you can't avoid it now on radio, TV ads. It's it's everywhere. So there has been a lot of chatter recently. The IRS has started doing some audits, particularly focusing on these like ERC mills that are just qualifying everybody and submitting wages. So that's something that comes up, and your accountant may have talked to you about that already as well. So that's the history and where we are today on the program. I want to jump into how it works next. So the credit itself is based on a percentage of your qualified wages that you paid in 2020 and 2021. Potentially up for most businesses, third quarter, as I said earlier, but potentially to the fourth quarter in some cases. The qualified wages itself for most businesses is going to be your gross wages minus whatever was forgiven on the PPP. There are a couple other credits that may come into play. For example, if you're getting an R&D credit or a WOTC credit, those are the more common ones that might interact. That's just part of the job of, calculating the credit correctly though. The maximum credit is $5,000 per employee in 2020 and $7,000 per employee per quarter in 2021. And that means that for the majority of businesses, assuming that you qualify for the whole period of time, that you are looking at a $26,000 maximum per employee credit. There is a very, very small subset of businesses that might qualify through fourth quarter 2021 that could get up to 33,000. Okay, so we talked about qualified wages. There is actually a limit on the number of employees that you can have to qualify for the program. I will say a word of caution here. The definition of it's 100 full-time employees in 2020 and 500 full-time employees in 2021. The definition though is different than the one that was used in the PPP. So if you are, if maybe you did your PPP forgiveness application and you saw that you have 150 employees, that does not necessarily mean that you're over the cap for this program. So it's just a slightly different way that they defined it. There are 3 total ways to qualify. The first one, it'll start with what I consider the easiest, is being a recovery startup business. So a recovery startup business is any business that started operating after February 15th of 2020. It's not necessarily when you started the business, it's when you started really accepting customers and actually operating. So there's been a few times we've found a business that, maybe started in January, but did not begin accepting customers until March or April. They're under this. A recovery startup business automatically qualifies, no questions asked, and no other determination needed for 3rd and 4th quarter 2021. So revenue can be up as long as there is a cap on revenue, but for a lot of startups it's not a problem. So 3rd and 4th quarter 2021 almost always qualify for your recovery startups. The second way to qualify is that you have a significant decline in gross receipts. So the way that is calculated, you look at a given quarter in 2019 and you compare that to the same quarter in 2020 or 2021. Now for 2020, we need to see a reduction of 50%. This is, and we are talking gross receipts, so this is not a net income. There are a few things like, I don't want to get too hyper technical, but there are a couple things that might be showing up as gross receipts that can be excluded, like your basis in a capital asset that was sold, and a few other things. Again, I won't get too detailed. For 2021, the reduction only needs to be 20% or more. And then the last way to qualify is that you were subject to a full or partial shutdown due to a government order. And that's just straight out of the statute. So that's why it sounds so funny. This is where the nuance comes into play, right? There's the revenue procedures that were issued related to this have about 103 pages of what are essentially Q&As, where they give examples and then they say, does my business qualify in this situation? And then some examples, yes, no. So we have to tie all of those together to try to come up with the analysis for any particular business. The other aspect to that is that there was some sort of government order. So one of the things that I have found is that the willingness to do a deep dive into all the different agencies that might have been issuing orders is not always there. So that's one of the things that we're I think particularly good at, is just going in. It's not just the orders that DeSantis issued. There was Department of Health orders related to specific industries, dentistry, home health care, nursing homes, that were different, or more particular anyway, than the statewide orders of general application. So that is going through there and determining your business may have had a different set of orders. Sometimes there's even federal orders, like transportation, for example. There are these federal orders that impacted things that overrode the state, the generally permissive operating, starting in 2021. So those are.
So Barrett, if I could interrupt there.
Portion.
So that's an example of, I believe, since Doug has mentioned the Jolly Trolley, of where a federal order on distance and passenger counts was the nuance. There's something that's an example of that kind of thing, right? That kind of nuance.
I didn't want to give any specific examples, but now that it's out there, yes, that's a good example. So that one, is there's some Florida orders that impacted as well, especially related to capacity on like large venues and things like that. So the Florida orders extend out until May 4th. That is usually the end date for most of Florida. There are, however, still certain industries like dentists and things like that that were subject to additional restrictions after that date, really all the way through 2021 and on and still today. So the Florida final order of May 4th is not really the end of the road for certain businesses. So the continuing on into that, one of the restrictions is that there does have to be an order, so we have to find that. And that's again where the willingness to go find it comes into play. The other part is that it has to be a non-nominal impact. So if you have a line of business that was, 0.5% of your gross receipts, that's not what we're looking for. But if you have something that's an appreciable, they establish a clear, if it's more than 10%, it is deemed non-nominal. So that's like a safe harbor. So that's just something to consider. There could be, anything that is a decent portion of your business that was impacted by an order could potentially qualify the business. Now, a very important point to make here, and this is something that is absolutely lost on a lot of people who are looking at this program. If you are subject to a partial shutdown order, full or partial, it does not matter if your revenue went up. That may not be what they want, but that's how they wrote the statute. So the fact that, I've had a lot of clients who have told me that they were told they didn't qualify because their revenues went up when they rather clearly did, because there was an order that directly impacted them. There are certain things to think about that are more clear, restrictions on capacity, on hours, on the types of goods and services that you can offer to people, anything that required, appointment basis, for barbers and things like that, there were requirements that it be appointment basis. Those types of things are kind of easy qualifications. There's good examples in there. There are examples in the Q&A that might be even a little bit surprising. There were non-local orders that weren't in Florida still impacted your business. One of the examples that they gave was a supply chain issue. So where your goods are manufactured, there was a shutdown there or a partial shutdown there that impacted your ability to get them. So even remote orders can in some cases qualify. We just have to again be willing to dig deep and find those orders that impacted the business. So that is largely how I did want to mention also essential businesses. Being an essential business is not a ban on qualification. To give you some examples that were in the IRS guidance, a hospital qualified, grocery stores qualified, doctor's office qualified. Those are again part of the Q&A. So just being, it doesn't get more quintessentially essential than the hospital during a pandemic, but even those were able to qualify using the examples provided by the IRS. So that is generally how qualification works. There's a couple other things that I want to briefly mention before I open it up to questions. The money, so if you were to file this today, you would get the money sometime in 2023. The money is not income in the year that you receive it. So, and unlike with the PPP, where there were lots of different restrictions on how you could use it if you wanted it forgiven, there are no restrictions. You can literally take this money out and buy yourself a boat or anything else if you want to. That's your choice. There are no restrictions. You can't get in trouble for how you spend it. That being said, there are potentially some consequences, like tax-wise, for what you do. It's not income the year you receive it. You do have to go back and amend some prior year returns to lower that's where you claim the business, you reduce the business expense on those years. So that may or may not have an impact. That's a good question. It's definitely a case-by-case analysis and, a good question that we can, go over individually or with your tax professional. Last but not least, I just want to mention that, earlier I talked about how these rules have changed over time. If you were told no before, it might have been based on an old set of rules. It has nothing, not necessarily anything to do with the abilities of whoever gave you that info. But the rules absolutely have changed. It's still worth a look. There were a lot of agencies that were issuing orders. It is not just the governor. There's a lot of local orders where the orders were more restrictive than what the governor's orders were. And so if you were told no before, I would not necessarily use that as a reason not to pursue it. I think taking a look at it and deeper dive into those different agencies and localities that are issuing orders is still worth your time. And then that was it. I can open it up for questions now.
Just a little bit of a summary before we do that there. So again, the call to action here is, as Barrett said, it's worth taking a look, even if you were denied in the past. The only obligation here is to get to Doug or myself and us get your name on that website, just so that it comes up for consideration. It's very easy. The reason to do it through us is that Emerge 180, out of their graciousness, is donating back a portion of their fees to what we do in Oldsmar. So this comes full cycle, this is part of the give back program that's generating some of these charitable things. So Barrett, we're really appreciative of Emerge 180 and the posture you guys have taken there. And this gets back to the spirit of what we're trying to do with the not-for-profit in pouring money back into the community as we work. Okay, so I'll stop there, and Doug, you are welcome to take back over again, and Barrett's here for questions.
And thanks. I want to make a comment, and you, Barrett, you mentioned it, that, you know, you're really basically getting your own money back. Is that not correct in some way, shape, or form?
That is absolutely correct. I mean, this is akin to your, getting a refund on your 1040 because you've overpaid.
Right.
At the time that you were making these payments, the program didn't exist, or maybe you thought it wasn't available because of the changes that have occurred. This is absolutely just getting that back. And I guess I should also mention, yeah, since it's not income in the year you receive it, if you spend it on the business, it tends to make up for any tax implications that may have happened on prior years. If you spend every dollar on business, it basically washes it out. Right.
And I'll just throw this out there. I mentioned, the Jolly Trolley, and they weren't sure they were supposed to get any back, and they ultimately did. Two of our chamber members are accountants, and they're actually referring, I think Vince has talked to them, Mark, and they're actually referring their clients to Vince and Emerge 180 because they're not skilled at, doing this kind of work and doing the deep dive. So I think that speaks volumes that the accountants are referring their clients to the Emerge 180 problem, just because they're skilled at doing the deeper dive than they are. They know all the nuances of what you qualify for and what you don't. So and I think you answered. Can you bring back up? Well, that's okay. I was going to say that the fears of getting it. You answered the one about do you have to pay it back, and that's a no. Correct. The fear of what can you use it on, which is, you can use it on anything. In fact, one of the businesses that Vince showed up there, the amount of money that they are going to get back is potentially going to allow them to open a third store. So, I mean, it's not insignificant amounts in certain cases. So it's worth a check for sure. And I can tell you that a couple of the people that have done it have said it's fairly easy to do. What is it? The form, basically it's revising there. What are those forms, Barrett?
The 941, the quarterly employer.
Revising the 941. I don't know that it's that easy, but that's it's already document paperwork that you already have, correct?
Usually, sometimes there needs to be a little bit of a deeper dive into the payroll information than what most people would keep on hand. But yeah, it's easy, and most businesses are going to have some sort of process for how they determine their paychecks. Whether it's they use a third-party processor can get this information to you, or even if it's just a smaller business that's doing everything in-house, there should still be an Excel spreadsheet or something that we can use. We're pretty good at making it work with whatever the business can provide us. It is supposed to be a very light lift for the business. We do almost everything. We just need, the original returns, which should be absolutely on file already. The payroll information, which may take a little bit of gathering, and then the PPP forgiveness application is about the only list of things that we need. Government orders, we are looking into those ourselves. I should actually mention that we do have a portal. It's blockchain encrypted. It's very secure. And the documents that we gather, including notes on qualification, orders and things like that, are all being saved in case anyone does get audited. We had one client get audited. It was probably the easy. I've done lots of audits. I've been, I started out focusing on just IRS disputes. That was the majority of my early career. It was one of the easier ones to deal with. I had every document that I needed at my fingertips. I think I spent about an hour responding to it, and they ended up clearing it, and that client just got their check actually for that period recently. So we're going to position you well to deal with it. And we handle those if they come up, and I just have a lot of experience in negotiating and dealing with the IRS.
Any questions? I did scan in this document, but Vince had the website up there. So either reach out to Vince or myself, or I've scanned it. I can send it to you if you need the information. So any questions from the crowd? I mean, as I look at our chamber list of over 500 chamber members, I can't really think of very few that shouldn't be in this program. So, including my own accountant, I think is going through it. So, and letting Emerge 180 do it for them. So.
We have a lot of accountant offices as referral wealth management people who are referring work to us. So yeah, it's absolutely, we are doing this for accounting offices.
Sure.
And
Awesome.
for
And
their clients.
what are you seeing? I know originally it was quite a lengthy time frame in getting the money back. Are you seeing that being shortened, I guess, for lack of a better term?
It's a yes. Overall, the average time is much shorter. We've got some, if you had asked me, say 6 months ago, I would have told you somewhere between 6 and 8 months after everything is submitted before you get the money. We have recently had clients getting them as fast as 3 months. But so now it's a little more like, somewhere 4 to 6 is pretty normal. If it is an especially large amount, they're sending them to a different processing place, and those can take longer. Also, if you're working with a PEO, those also take longer. We're one of the few companies that will actually work with the PEO to help you claim the credit. A lot of them, they can be a little bit well, they can ask for some more documents than what is absolutely necessary. So some companies just don't work with them, but we will, especially for for a local company that we have ties with. They're absolutely willing to do that.
Awesome. Any questions? I have recorded this, so I'm gonna process it and I'll post it on a website, and the link can be available it'll be available through our YouTube page at the chamber. So if you have somebody that you think could benefit by this, which we've had people refer people to it, but they just need to use that website so that we can track them and make sure that they're getting all the documents and getting all that they're entitled to.
Absolutely.
So this has benefited the Chamber of Commerce itself, has been a beneficiary. So this helps promote that. It's benefited the small business in the community. And then there's the Give Back program from Emerge 180. So all of these things are helping us build a better community.
Yeah, the chamber got back, I think, $36,000 or $38,000 back. So that's, for a Chamber of Commerce, that goes a long way. I know that there was a church that went through the program, and I think they got, I want to say, roughly $50,000, which really made it a lot of changes for them. They were able to upgrade their website. They were able to do a lot of things that they didn't have necessarily the funds for before. So as I say, beneficial to everybody. I can't think I think it's less than 500 employees depending on the year, full-time employees, and you pay W-2 wages, and you started before whatever the date is. So if you meet those 3 things, which most of our chamber businesses do, there's no reason you shouldn't look into it.
Absolutely. And there's been a lot of good that has come out of this program. Not always the case with tax lawyers day-to-day activity, but it's been very nice to see businesses have been saved, businesses have been able to expand, they've been able to keep their employees on board for longer. It's been it really has been a very beneficial program for a lot of businesses out there.
And Doug, I would say too that just to thank you for your enthusiasm here. I mean, that enthusiasm, you're a big part of this, and that $3.7 million, a lot of that has your name and your never letting go. So it's very much appreciated on behalf of all of us who live here.
Yeah, and I appreciate that. It's great. And I will just say this, obviously there's a fee as with anything, but to that point, Vince has indicated that Emerge 180 is giving a portion of that feedback to the nonprofit. And I will tell you this, I listened to the Dan Patrick show on sports radio, and they advertise this same program. I can't remember what the company is, but their fee, I think, is almost 3 times, I believe, what a merge 180 charges, and they don't give back to the community. So I'll just throw that out there.
Yeah, there absolutely are companies charging up to, I've seen as high as 40%, which is,
Yeah,
like you said, 3 times as much as what we charge a
Right.
lot of times.
yeah. So I know Big Cat Rescue was very appreciative of what we did for them. I think, I don't know, they're in 6 figures. I know that. I don't know exactly, but he wrote me a very nice letter saying that, the chamber has helped them with federal legislation, but that this was, basically found money. They never expected to get anything back. And so we hope they're chamber members for life now.
Hope so too.
Anything else, Vince? Any closing comments?
No, that's it. Just a big thank you to everybody. Good to be a part of this community. Barrett, you've been super. Thank you for taking the time. I know you're so busy. We
Of course,
appreciate it.
Vincent, absolutely. Anytime you need me.
And I'll get this out to everybody once I get the video process. So if you signed up through Chamber Master, I have your email and we can send it back out to you. And I can send you the document if you want. All right.
Okay, thank you.
Awesome.
Absolutely. Thank
Have a
you.
great day.
Thank you,
thanks, Heather.
everyone.